What's going on YouTube? This is Dave's Daily Trades coming at you live with another video on AMC. So I know a lot of you folks were a little bit disappointed with today because of course it did not go in our favor, but that's just fine. I do want to take a quick look at a technical analysis that I've drawn up for you folks on the 1 minute, 1 hour, and 1 day chart, and then go through some specific examples of how hedge funds are actually able to drop the price of AMC and GameStop, just like we've saw today and of course in the previous trading days. And then also there's been a lot of information coming out about market manipulation from so many individuals that I just have to cover today. So with further ado, let's hop into the TA on AMC. So like I said, first thing in the morning, we did have that severe drop off. I believe we closed yesterday right around $55, and right within the first 5-10 minutes of trading, dropped down to 48.12, which was the low of the day. Really, for the rest of the day, traded sideways and a very uneventful, boring day, but that's totally fine. Of course, if you guys have been with me before, consolidation is key at and around these new levels of AMC, which we have never seen before. So we literally saw great consolidation from, I'll say, 12 o'clock all the way to just about the last hour or two of trading. So this was totally fine to see. I know it's boring, I know it's uneventful, but guys, it's healthy price action movement, especially when we had that 90% day and we're still trading up and around that area. I'm looking for consolidation mostly with the MACD, and this really just lines up perfectly. Of course, the RSI, we did have that oversold right in the morning because we did have that massive dip, but traded pretty healthy for the majority of the day. So really the biggest thing that I've been tracking for the past, I would say now, couple of trading days, 3-4 trading days, is this wedge pattern here. So guys, as we can see, this is a wedge pattern, really perfect, and we are trading sideways now. We did have the 3 tests at the top, and I've always said this, but AMC usually breaks out on that 4th candle. I know people are disappointed that we are trading down. Things aren't exciting. We haven't reached $100 yet. But guys, I do want to point you down to the technicals here. The RSI is really back down to a normal level. And same thing with the MACD. We're coming down to a neutral level where we can then expect a move up. So my price predictions for the rest of the week is I think we may see one more retest of this lower area, somewhere around $45 before shooting up. If that doesn't happen, our worst case scenario would be we fall back into this, I'll even call it $34 to $24 level, which looking at the technicals, I really don't think that is going to happen. And especially, I do want to point you down here to the OBV. This is staying literally flat. So this is really just showing us that apes and the majority of shareholders are actually not selling. This is synthetically hedge funds having them drop the price. And we're going to dive into that, so stick around for that. Just want to show you guys progress for those of you who are down, who need a little boost of confidence here, because I know I had a lot of friends reach out to me today saying, hey, what's going on? Is AMC dead? Is the squeeze squoze, as many of you folks will say? And no, it's absolutely not. Guys, just a few weeks ago, keep in mind, we were literally at $12. We're now trading sideways at, just call it $50 even. So this is totally fine to see. And we're really just finding out a new area, getting comfortable before we spike back up. And RSI is now over with the overbought. MACD, that's still pretty high, of course. But like I've said in previous videos, the MACD is really tracking the candlesticks, not the behind the scenes data. So take all of this with a grain of salt. Also, one other thing to note is volume has been dying out, but I really think it's because day traders and swing traders got their profits, and the only people who are really in this right now are the diamond hand people, which is totally fine. I'd love to see that even more. So anyways, now on to the fun stuff. So Adam Aaron literally just came out with the tweet just about an hour ago, and I'll read it to you folks. As of June 2nd, of course, the voting came out. AMC had 501 million total outstanding shares. But the most important thing shareholders in the US, and guys, this is literally shareholders in the US and abroad, has increased to 4.1 million shares. Guys, we own, here, I'll highlight it here so you guys can see, more than 80% of AMC. While some own more and some own less, average stock holding for AMC is about 120 shares, which is what we predicted before. So this is right on, but of course, super bullish. We own AMC, guys. Literally all you folks on Reddit, on Twitter, on Facebook, on Discord, wherever you guys are hanging out, we own this stock. We decide what happens and we decide the price. That's the most important thing. So this is just absolutely so bullish in my perspective. And especially now that Wanda's out of the picture, who was the majority shareholder, it's really retail owned, which is so amazing to see. Of course, I've been following Christian Andrews just for a couple weeks now, and this guy is so intelligent. So I know everyone uses Ortex to find out the SI percentage. For those don't know, short interest percentage is what SI stands for. And let's just read through this. When brokers are forced to report SI, their algos, which of course algorithms, only catch the shares classified as short. So I did have a video that I posted a few weeks back showing that market makers and these hedge funds can really, the way they mark the shares is the way it's classified. So you can mark a short position actually as a long position. And that's exactly what's happening. So the data that we're seeing on Ortex, and don't throw shade at Ortex because it's not their fault. They're just collecting the data and reporting it. But the problem here and why Ortex shouldn't be trusted is because Ortex is actually getting falsified information in the first place. So obviously the data is going to be skewed. And what do they want? We just saw $72. They want us to think that the squeeze is over, it's already squoze, and this thing is done. It's a dead cat. But that's not the case. Guys, they are illegally reporting the SI percentage because their algorithms are doing all of this. I don't even think there's a trader behind here pressing these digits doing, oh, let's manipulate the stock today. No, it's their algorithm that they've programmed, that they designed to do this, that they've been using for years and years and years. So this is just absolute evidence that the short interest percentage for AMC is not, what is it? Whatever Ortex is saying, 17, 18%. Christian Andrews is saying, my guess is short interest is 45%. Now, to give you guys a little bit of back-end knowledge, the short squeeze that happened in Volkswagen back in, I believe it was 2007, 2008, somewhere around then, was 11%. So guys, if we're accurate on this, saying SI percentage is actually 45%, that's going to be massive. It's going to be literally the mother of all short squeezes. It's going to be amazing. The last thing I want to jump into is, like I said before, how are the hedge funds dropping the price like crazy in AMC, in GME? But the biggest thing, and we'll just take a look back here, see if we can zoom out. Guys, they're not dropping the price as much now. If we're looking at a percentage base, over here, we saw massive, massive drops over here. And this was also because of Wanda, of course. But guys, this is consolidation. These are not big price drops. Yeah, of course, we saw a crazy wonky day here, but that's because volume was absolutely through the roof. Buyers, sellers, day traders, swing traders, you name it, were coming into the stock. So their ability to short the stock is getting less and less and less. And that's really just showing the early signs that we're winning here. But back to this article right here. It really just goes into, why are they dropping the price? How are they dropping it? I'm not going to take the time and go through this entire article. I'm pretty much going to summarize it. So, of course, they go through some articles and show, okay, here's some interesting articles from the SEC that we should look into of like what's going on, all of that stuff. But the two main terms that I want to focus on is layering and spoofing. Spoofing is something that I covered before. It's essentially when you put an order that you're just never going to fulfill. It's just on the books. It's just driving price down because obviously supply and demand is there. And you just keep on lowering it down and lowering it down so it doesn't get filled. Now, layering, somewhat similar, and actually a term that I was not familiar with before reading this article. Anyways, layering is a strategy in high frequency trading, which of course, HFT, we've heard that term thrown around quite a bit, where a trader makes and then cancel orders that they never intended to have executed in hopes of influencing the stock price. Guys, we've been seeing this so long. We all have that level 2 data, but a lot of this is actually going on in the dark pool. So we never even see these transactions going on. That's synthetically throwing off supply and demand, which therefore lowers the stock price. Totally, totally illegal and blatant market manipulation. We all know what's going on. Probably the SEC, they might know. FINRA, all these regulatory bodies, they probably know what's going on. And that's why they're passing these new rules, these new regulations to be put in place so this never happens again. Which, of course, makes AMC, GME, and a few other meme stocks literally a once-in-a-lifetime opportunity. I want you guys to really have that sit in your head, because this, what's about to go on, will never happen again, because it's going to create such a shit show. It's not even funny. Anyways, really the funniest thing that I found today is I've really been searching of like, what the hell happened with DTC 2021-005. I know that was such a big bullish piece of information that we needed to put in place before this could absolutely skyrocket. So I think I found out why. So I'll also link all the articles that I talk about in the description below. If you do want to read through that, totally be my guest. And absolutely, I encourage you all to do your own research, as I am not a financial advisor and this is not financial advice. Do your own research. Don't believe me. Don't believe anyone else on YouTube. Search it. Talk with other people in your groups of Discord, Reddit, Twitter, whatever it may be, and then come to a conclusion. Anyways, so the title of this right here is Apex Legal Proceedings Reveal DTCC Colluded with Hedge Funds. The pressure is real. So real quick, we're just going to jump into this. There's an Apex merger that disclosed its legal proceedings recently. And this is page 186. If you do want to read through this, I mean, 200 pages, I'm sorry, but I do not have the time for that. And I know a lot of you folks don't as well. Anyways, this is quoted from page 186. So we'll just read right from here. Plaintiffs allege that Apex, along with 30 other brokerage, 30 other brokerage, trading firms and or clearing firms, including Morgan Stanley, E-Trade, Interactive Brokers, Charles Schwab, Robinhood, Barclays, our favorite person, Citadel, and the DTCC engaged in a coordinated conspiracy in violation of antitrust laws to prevent retail customers from operating and trading freely, in a conspiracy to allow certain of the other defendants, primarily hedge funds, to stop losing money on short sale positions in GameStop, AMC, and other certain securities. Holy shit. So this is what the SEC is doing right now. This is all behind the scenes, and we're probably not going to hear much of this for months. Of course, you're going to have all of these brokerages, trading firms, clearinghouses. They're going to fight this. I mean, guys, they have billions, if not trillions of dollars backing them right now. They're going to get the best lawyer in the world. They're going to kick this can down the road as long as they can. But guys, we know the data, we know the facts, we know what's going to happen. They can kick it down the road all they want, because me, I'm holding on for years if that's what it takes. I don't care. I know all of you apes who have been with me since January. You guys are in the same position. If it takes that long, it takes that long. So be it. Anyways, one of the last items that I just wanted to cover with you folks is the June 2nd vote. So one thing that a lot of people were talking about is, hey, what happens if they do find a lot of synthetic shares or more shares available than the current 500 and some odd million shares that are actually available in the float? So anyways, I really predict, and I believe this analysis right here that was done. It was very good. I found this on my Discord chat. And really, I only have like half hour, 45 minutes on break. So that's really when I'm doing a lot of this research or a lot of this back-end knowledge to bring to you folks, so you guys can go ahead and share that to the larger community. But anyways, what this means is if there are more shares available than the total actual float, then the shareholder meeting is actually going to get canceled. So since synthetic shares require arbitration, shorts are essentially forced, others, please clarify, of course, to find any shares at any price to settle the difference. We know that. To be clear, creating these shares is not the same thing as naked shorting a stock. Synthetic shares are often used to, quote, to create liquidity. Of course, we've heard that term. We've heard that kind of BS floating around. and that's why essentially it's in those quotation marks. However, they ought to be settled prior to shareholder meetings so that companies can have an accurate and exact count of their total share float. Synthetics skew this number, of course. More synthetic shares in the market, that's why the dilution happens, and that's why we really think that there are so many more shares out there than what's actually being reported. So don't be surprised, and actually it's a win for us if this shareholder meeting gets canceled, because then we know this evidence, it's out there, AMC has it, they're probably sending it right over to the SEC, and bet your ass Adam Aaron is not going to take that shit. He's absolutely going to do everything in his power to fight for us, because we've had his back through all of this. So guys, I know that was a lot of information today, but I'm just so excited about all of this. I'm absolutely going to continue to hold with all of you apes, and I know you are holding for me, and I greatly appreciate that. Anyways, guys, if I provided any good or useful information, please hit the like button. And also, if you're not subscribed, hit that subscribe button and turn those notifications on. Definitely looking to grow this channel to above 1,000 subscribers sometime in July. That's my current goal. And if you guys can hit that subscribe button, it'll help me so much. Also, don't be afraid to share this elsewhere. Share it to your friends, share it to your family, share it to apes who are not in AMC right now, because like I've said, and like I'll continue to say, this is a once in a lifetime opportunity, and I don't think anything like this will ever happen again. All right, guys, enjoy the night or the morning, depending on when you're watching this, and tune in for the next one.